watching famous Dave on YouTube. You're watching famous
And good morning.
on YouTube.
All right, I just let that repeat, so it would seem like I did that on purpose, having that play twice. Welcome this morning to the show on a Monday morning, and we find ourselves in a situation where stuff is just moving really slowly. After that big vol crush on Friday, you would think that we would have a little pop this morning, as usually happens on a Monday morning, but really just nothing going on once again as we let's take a quick look at the numbers as we come to the day today. And the thing that sticks out the most to me right now is oil futures down 4 and change. And thank you to Oliver for pointing out to me that we don't actually have to leave Thinkorswim to look at the oil term structure. In fact, if we just go if you look above my head here, and let me just center this a little bit better. If you look above my head here, you can see, there we go. You can see that the futures are listed here. Without going anywhere else, we can kind of look at things. And how did I get here? Well, I'm under just trade CL, and then I open this tab that says futures here. But the point to make here is futures are down. You can see the front month future down over 4 points on a volume of 200,000. And you can see the volumes in other futures here. But most important to take away from this particular chart is just that you can see how steeply the term structure is in contango. The front month future is 12, the next month 18. Now that's a very steep percentage of contango. So let's just do the math really quickly on this. So if we take the second month future 1844 and we subtract the front month future a price of 1270, we get 574. So if we take 574 and we divide that by the front month future, we are going to get and we'll use 1275. We're going to get a 45% contango between these two futures. Now, the exact ratio of futures and how they contribute to USO is unknown at this point. So that's just another reason to shy away from USO. I would be exceedingly careful about trading UCO or USO with the current oil situation. In fact, if we look since last time we talked about this at the price action in USO, it has gone down even on some days when oil was up. That's an ugly looking chart there. I still am not happy with my charts here. Try to adjust that like that maybe. You can see that big down move in oil. Anyways, the VIX here today down again, and we notice now the VIX is below the first 2 month futures. But let's look at the term structure together. This is the sort of teaser for the video, the thumbnail, the headlines for the video. We were talking about how the market has it looked ahead to the election. Well, certainly when we pull up the term structure, the election is featured in the term structure here. And when you look, you can see here's the term structure, and look at the October futures. There's a dimple, right, between the October futures. Those are higher than SEP, and that dimple is due, of course, to the election. So this is reflecting the election risk right there. That's why the future is higher. You can see we're still in backwardation in that the futures are sloping downward still. It will be interesting to see what happens here, because I suspect we could see some sort of situation where the front 2 months go into contango, where the rest of the curve kind of stays as kind of a frowny face. We'll have to see. It'll be interesting to see today what happens. But, for this whole, for the VIX to go below all the futures, the VIX would have to drop to at least 28.88 here. And as we know, if the VIX continues to move lower, those futures are going to shift down as well. So I think it's pretty accurate that we would need to get almost to a VIX of like 25 before the whole term structure was in contango. However, we could see, as I said, the relationship between the front 2 month futures go into contango, where the rest of the curve is still in backwardation, that sort of thing. And remember, for our purposes, trading TVIX, UVXY, or VXX, those front 2 month futures are really the only thing that we care about most of the time. Of course, right at the end of the expiration cycle, we look at the what's going on with that third future. But in general, it's just those front 2 futures that are our focus point. All right, now let's go over, I just want to go over the positions I have on right now with you really briefly. And it's just 2 positions. I am VXX. I am currently long the September 38.34 put spread. Let me get out of the way here once again. And this transition thing is weird. All right. Let's pull this up a little bit. So I am long the September VXX 38 puts and short the 34 puts. So looking for this to continue to move lower as we head towards September. And then the other bigger position I have is in SVXY. Remember SVXY being a 0.5 times leverage, so it's deleveraged. It only moves at half the rate of the futures. But if you look at the chart here, we came from essentially 70, 69, 79 in January. We're all the way back down to 31 here. However, we could certainly return back upwards. And if we can get back into contango, we will decay upwards in this one back towards those levels. So I do have a butterfly on where I am long the 50, 70, 90 fly. So that would do the best if on expiration SVXY was 70. Now, this position I put on is far out in time. It actually is out until June of next year. So if we pull up, so that's 417 days from now that this expires. You can see my position here. I am, that's weird. It doesn't show the numbers, but essentially I'm long, I believe 59 of these. Let's see if I can change this so we can see the numbers here a little bit better. All right, so you can see I'm long 59 of the 50 calls. I'm short 116 of the 70 calls, and I'm long 58 of the 90 calls. So essentially 58 butterflies on there plus an additional one of these June 50 calls. And so this gives us a delta of 1,200. And, the marks on this have been bouncing around. It showed me making $5,000 on this position since I put it on like Thursday. And I just think that's it's some weird marks. I got good marks over the, on Friday afternoon. It one of the options, they widen out the markets at the end of the day. And so it showed me making $5,000 on Friday afternoon. I don't think that's true. Position shows long 1,200 delta, so that should mean if this is up $1, we make $1,200. And it wasn't even up $1, and it showed us making 5,000. So this is not real. Probably right on the open, it will come back down, and it'll show us being down $5,000 on the position. So take that with a grain of salt. It can be kind of stressful. Obviously it's nice when you see like, oh, we made money out of nowhere, but I know that this is not real and it will disappear. However, this is a position that I put on. It's very illiquid to get into these butterflies, and it's illiquid to get out of them. So it's the kind of position that you want to think a lot about before you put it on, because you're essentially stuck with it for a period of time. And so I plan on just leaving this. It's just like a set it and forget it thing with this particular position. Now, I hope you folks are doing okay. There hasn't been a whole lot to talk about in the last couple sessions. I haven't really been around that much to talk. Chuck says, are you going to play any earnings this week, Dave? I don't have plans to play earnings right now. Chuck, which ones did you actually have in mind? Let's go to our StockTwits page and look at what we have as far as earnings coming up this week. And let's see if we can take a look here at our earnings calendar. Yeah, I've been fairly just kind of sticking to my Vix stuff recently. And it's escaping my brain, of course, when we're live, how to pull up the earnings calendar. So we'll look at the different calendar here for earnings. So let's see. Yeah, so I'm not going to be playing earnings this week. Here we go. Earnings Whisper is probably a good spot for that. Although I know a lot of people will be doing that. And we can look, one thing that I do like to look at is to see where the most volatile options are coming into earnings here. When I like to go to bar charts for that. So let's take a look at this. Highest implied volatility. And what do we see? MESO. So many of these are like these really low priced issues, which I just don't want to involve myself in at all here. Let's see, AMC, INO. As we move into another week of earnings here, I know that we do have, of course, Tesla coming up, which, people, I'm very cautious about, of course, being long Tesla. Look at them. Look at the price action in Tesla recently. Just amazing. It's come back so much. I did have a position on in Tesla, but I ended up actually taking it off last week for a profit. But yeah, the market has bounced back. I think it's surprising to most people how much the market has bounced back. We like to review what happened, and as we look back over the last couple of weeks, so many people, as the market came back, did not believe this was true. Thought that this was, sell the rally. We're gonna hit the lows again. I mean, almost to a person, every single person thought we were going back down, and we haven't gone back down so far. I mean, I can't predict the future, and of course, but up until now, we have come off the lows and we just haven't gone back down. Let's take a look at the E-minis really quickly here, and see where we came from. We've come back largely from the sell-off. It looks like we're pretty much like halfway back here. Now, it would not surprise me at all if we just stalled here and just kind of sat in a range. What if we just sat in between 2,700 and 2,900 for the next year? That really wouldn't surprise me too much. But if you think about this, the whole way up here, this has been a wall of worry where people have, to a person almost said that, like, we are not going to rally here. We are going lower. And we have rallied all the way, halfway back, basically. Let's look at the NASDAQ really here. NASDAQ has kind of rallied even more back. But really, look at that volatility there. Now, we certainly could roll over. I'm not, I am short the VIX right now, or short VIX ETPs, but it certainly would not be surprising if we give back some of this and go lower at some point. However, up until now, it's just been a beautiful down move in the VIX here. Look at this down move that we've had in the VIX. And really, that speaks to, the VIX does not speak to the fact that we're going to have some huge down move. In fact, it kind of speaks to the opposite right now with volatility coming in. If we look at the chart of VVIX, VVIX has come in a ton as well. Remember, VVIX being the implied volatility of options on the VIX has come in a ton as well. And almost back to quote-unquote normal levels. Let's look at the VIX. What would we consider being back to normal levels? A 25? 25 is still at the high end. However, it wouldn't surprise me if we actually got there. And remember, a lot of times when we start moving down in the VIX, it continues to move down lower than you actually think it would. So this has the potential to catch a lot of people trying to pick a bottom in the VIX here, especially, let's say the VIX gets to 25. You're going to see a lot of people taking a stand and saying, I'm going to buy a 25 in the VIX. Now, first of all, it's hard to buy a 25 in the VIX because there's no great product to buy volatility in, as we've talked about over and over again. But second of all, these moves sometimes just continue, even though they don't make sense, they continue in one direction. We sort of have momentum here to the downside. And certainly when we look and during the day, the E-minis have such a narrow range. I mean, if we look, one thing I noticed last night when I was looking at the E-minis trading is that the range is just not very wide. Like, not a lot is going on. Nobody really wants to do too much. And indeed, if we take a look here, it used to be this is a 100-point swing very easily. Here, okay, well, we're between like 2850 and 2860, right? It's basically like a 10-point range the last couple hours. That a couple weeks ago would have been just nothing. I mean, we would, the market was like between the bid and ask was almost 10 points, but now all of a sudden everything slowed down. People are not really focused on the stock market as much at the moment. People are turning to other things. And even though we haven't seen like crazy spikes in volume, it seems like this rally is for real, at least for the time being. And the range has just been nothing. Now, this isn't totally surprising, though. After many big down moves and many big events, people, they're fatigued. People are fatigued with sitting at home. They're fatigued with chasing the market back and forth, up and down. And thus, seeing a period of like lukewarm volatility is not that shocking. And the fact of the matter is a VIX of 35 is historically very high. And so even though we've come from a higher area than 35, 35 is still very high. And it's not that surprising if we continue to move lower. Now, once again, I can't predict the future. We could spike tomorrow. However, the odds kind of favor us continuing to move lower in my mind, just because we are above the historical average in the VIX. I read an article in Seeking Alpha a couple weeks ago, and it was talking about what it would take, what we would need the market to do, quote unquote, for us to have a lower VIX, like a VIX below 20. And I think the person that wrote the article kind of misunderstood the whole process here. The market doesn't, the VIX isn't based on what level the market is at. The VIX is based on how much the market is moving around. And so it doesn't require us to, we're not required by some kind of rules to take out the all-time highs for the VIX to move considerably lower. All we need is for the market not to move around. If it just sits still and doesn't really do anything, and it's been sitting pretty still the last couple sessions. Now, that might not continue, but if it does, we could see the VIX certainly go below 20 just because we're not moving. Nothing's going on. So don't think that there's a certain spot that you should take a stand and say, whoa, it's gotten to this level where I'm taking a stand. It's time to. I saw somebody actually in one of our Facebook groups saying, I think it's time now to put some TVIX in my pocket, and certainly the case for that is that we are not in contango, and the drag per day. The decay per day against you in TVIX is not super heavy right now, as if we were in heavy contango. However, we are historically still high in the VIX, and I would advise against putting TVIX in your pocket to hold for a rainy day, so to speak, because we seem to have plenty of rainy days now where nothing's going on in the market and stuff is just sitting still. So the trend right now, until further notice, is down on the VIX, and until something breaks that trend, that's what the trend is, at least in my mind. All right, so let's see. We've got 10 minutes till the opening bell here. Let's take one more look at the chat here. Let's see what we got going on. And let's see. Dave, oil is the only way that most countries outside of America get access to dollars. We can't keep going up if oil keeps dropping, right? Thank you, tracking the market, because that you do make an excellent point there. Certainly this oil situation is a big problem. I would have thought that the market would be taking it more seriously, and that I would have thought that there would be some more severe consequences to the equities market, that oil is down so much. The market right now seems to be shaking it off, but certainly this oil down causes huge problems internationally for financing. There's obviously a way that the market could rally with oil being lower. However, certainly it takes a lot of potential buyers out of the equation having oil so low here. And it also creates a lot of problems as far as businesses not being able to pay their debts, and not being able to honor their contracts, not able to make payments. And this stuff takes a while to come about. Oil can go down 1 week, and then a week later the debts haven't become due. But as this drags onward, it's going to become more and more of a problem. Now, I guess the way it's being seen is that this current oil situation is not going to last for too long. And, you can see that in the term structure, in that the front month future is 12, the second month's 18, and so forth. But still, even an 18 a barrel is not a great thing. And I certainly think that you make an excellent point tracking the market. There is, I would agree with you that there is some sort of limit where it's not going to make sense, the market continuing to go up with oil at these levels. But the implications for the VIX and volatility are still not changed, in that we don't need the market to rally for the VIX to come in. It can actually, as long as nothing's really moving around, the market can stay right where it is, and the VIX could come in. The market can even move a little bit lower, and the VIX could come in. But certainly the oil situation is something for the case for being long volatility, because it doesn't seem like the market is taking this seriously, and it seems like it's a very, very serious situation which we're in regarding oil. Then there's this disconnect between the equities markets and this oil situation, which I don't really understand, to be honest with you. Let's see, Chuck. I'm looking at selling some 5-point wide VXX call spreads expiring Friday. I think that obviously, if you're selling, with VXX 40 and a half right now, if you're looking at selling the 45.50 spread, obviously the odds are with you. However, you're basically betting, $500 to make $50, so to speak, or $450 to make $50. And so if it does blow up in your face, it's going to be painful. The odds are obviously in your favor that will work. I do feel that taking a opinion on where VXX is going to move in the very short term, thus like in the next couple of days, is largely a crapshoot. Obviously, the odds are, like I said, that it won't pop up there as far as the option market is giving those odds. However, taking an opinion on what the VIX is going to do in the next day or two is, in my opinion, impossible to predict. I prefer to do trades that are farther out in time personally. I know that there are others out there that like to do these shorter term trades, but I believe that they really are a lottery ticket in a way, because the slightest thing could make VXX pop back up to 50, and you put $450 on the line to make $50, and it can blow up in your face. So I would urge caution with that kind of trade. I would prefer to go farther out in time personally, but best of luck with it. Let's see. Boeing should be a huge miss. It's very hard to tell. Now, we say this all the time with earnings, that earnings could be good, bad, or indifferent, and the stock could go up, down, or sideways. It's very hard to tell what is going to happen with the stock, even if you know earnings ahead of time. Now, Boeing could miss, but the whisper number could have been worse than the miss is, and it could rally. So playing that earnings game is a tough game, and I would state to you, even if you knew ahead of time what Boeing earnings would be, you still may not be able to tell which way it was going to go on earnings. VXX, how far out in time do you think is optimal? Obviously the farther the better. It's a trade-off. The closer to expiration you go, the more bang for your buck you can get with your available buying power and whatnot. So the farther you move out in time, the more time it gives you to be right, but you're not going to, it's going to take longer for you to achieve those returns, and B, you're not going to be able to get as much bang for your dollar as far as returns go. So you have to make some sort of compromise somewhere. But the longer that I've been trading this stuff, the farther out in time I've moved. I used to trade very close stuff all the time, but then I got burned so many times on it that I started moving farther and farther out in time. So I tend to stay at least 40 days out to 60 days. Sometimes when we're in a big spike, I will go closer in time because I'm making a short-term bet that we're going to go back down from that spike. So there's not a particular rule of thumb, but I like to stay more out in time than just... Now, the other thing is, some people will have a strategy where they're selling, let's say, an at-the-money call every week in UVXY, and they're committed to a strategy where it's like they're doing several trades, and they know some are going to win, some are going to lose, but they're committed to this strategy. They're going to keep doing it and keep doing it and keep doing it. And that's a different kind of animal, because they're saying that, like, over time I'm going to be successful with this strategy. I know it's not going to work each time, but you have to know yourself and know that you're going to be willing to keep with that strategy, even if you lose the first time or the first two times, that sort of thing. So that's a little bit different. I know several people that do trade UVXY and VXX where they've made a career out of selling every week, selling calls. And yeah, sometimes it blows up. It wouldn't have worked very well in the last couple months, but all those other times they've made enough money to make up for that. Let's see. I've got 5.3K and 58 put spreads 50 cents each. Well, CHXCX sounds like that trade's working out for you, so that's great. That brings up another important decision for us. Is let's say we put a trade on and it's 30 days out, 60 days out, and it's working for us. We put a trade on. Let's use your trade. We put a trade on in UVXY, the 58.57 put spread. Now UVXY is $10 lower than that, or $11. UVXY now 46 and change. Do you keep the trade on till expiration, or do you take it off? That's another question to wrestle with. It sounds like that trade is working out for you, though, which is great. What it comes down to is that you need to take risk to make money in the market. You could always make a case for why not to do a trade, like, oh, that trade's too risky. But only those who go out there and take some sort of risk are going to be successful at making money in the long run. And it's going to come down to your own risk tolerance. What we try to do is take the smartest risk possible based on your own risk tolerance. I can't tell you what your risk tolerance is. And, when we talk about, oh, well, I'm going to risk X amount of dollars, that dollar amount will sound huge to some people, will sound small to other people. There's always someone bigger than you out there as a trader. There's always someone smaller than you as a trader. But as for me right now, my positions, I am short VXX, I'm long SVXY, and I'm riding this down move, and I'm going to continue to do so. So best of luck to everybody during the week. I will be back on shortly to check in with you possibly tomorrow. Thanks for everybody who's supported me and who's signed up for memberships, all that good stuff. The way you can really help out is just leave a comment under the video, subscribe. That's all it really takes. I appreciate people signing up for memberships and whatnot, but if that's too much for you, just leaving a comment really helps out, because what it does is it puts my videos up higher in the list so people can find my stuff better. Cool. So the bells rang. Let's get on with the week here. Best of luck to everybody. Just amazing to me Tesla continues to rally like it does. Unbelievable. All right. Thanks for watching. See you guys soon. Let's cue the music. Cue the music.
You're watching famous.